Hey everyone, this is James with WSTrades.com. I want to provide an update here on ticker VZ or Verizon Communications. So it was pretty flat on Friday. Looks like they lost a penny or 0.03% on the day. So a really flat day here, and I came out to some of the longer time frames just to kind of show, what's going on with Verizon and the current pricing, and look far back on the charts to kind of see where we're at. So massive discount here. You can see this thing rallied up here several times to around 62 and just couldn't get through that level here on the weekly. I've got like the 20-year weekly pulled up here and kept ramming up against the 62, just really couldn't bust through that, and then it had this massive dump here the past few years. So still in a downtrend, still not really showing any signs of really consolidation or ready to go in an uptrend yet. If we kind of zoom in here, you can see it's still just kind of setting lower lows, lower highs here on the weekly time frame. But with that being said, I think the discount is really, really heavy because you've got to go back to like 2009, 2010 to kind of see the prices that we're seeing right now. So, I think this is a really good discount on the stock right now. It may move lower, but, I've been buying shares since I think like 35 or something. And kind of my plan on this stock is to average down. If it does make moves lower, let's just say this downtrend continues that we see here on the weekly time frame, I'm definitely going to be buying more shares. They pay a really nice dividend. If we zoom in here to the tail end of the chart, you can still see that they're paying a 65-cent dividend here. So as the price moves lower on Verizon, the dividend yield just gets better and better. So, I definitely like it as an average down play if they keep moving lower. If we come in and look at some of their financials and stuff here, come to the statistics tab, you can see their profit margin 15.58%. Over the last 12 months, the operating margin is 22.73%. Return on assets the last 12 months, 5.11%. Return on equity last 12 months, 23.39%. Quarterly revenue growth is in the negative a little bit, 3.5%. That's for year over year. Quarterly earnings growth isn't the best, negative 10.6% year over year, but you can see they have strong earnings still. Diluted EPS at $5 a share the last 12 months. EBITDA really healthy here at $47.91 billion. I was kind of looking at the balance sheet section here, and the current ratio is a little sketchy, but they are just pumping out a ton of money in cash flows. You can see operating cash flow here at $37.5 billion over the last 12 months, and levered free cash flow $11.47 billion over the last 12 months. If we look at book value based on the most recent quarter, they're at about $22 a share. So, if we look at fundamentals, they are still a little overvalued. But again, if we look at the chart, they've traded upwards of $60 before. So even though, fundamentally they still are a little overvalued, I still like the price where it sits right now. You can see their total cash based on the most recent quarter is $4.92 billion. So let's come in here and look at some of the financial statements. If we look at the income statement here on the annual and the earnings, you can see they're just pumping out big earnings here. If you go to 2019, they had $19.2 billion in earnings, and they've increased that to $21 billion the last 12 months. So the earnings are really going in a nice direction here. If you look back a few years to 2019, the earnings here are increasing. If we look at cash flow statements here, you can see the operating cash flow across the board is pretty consistent between about 35 to 40 billion on the annual. So still really strong operating cash flows here. The free cash flows here for 2021 are a little rough, but you can see they've got a big CapEx number in there. So there was a really big number there that's not common for them. As you look at 2019, they had a CapEx number of about 18.8 billion. They had 20 here, 26, 25. So this one, they were a little more heavy on the CapEx there, which kind of contributed to a negative free cash flow for this year. But every other year, you can still see they've got billions, tens of billions in free cash flow. Let's come in here and look at the balance sheet. If we look at assets to liabilities, they do consistently have positive common stock equity, which is good. You can see looking back to 2019, they had $61.3 billion in common stock equity. And if we go to the 2022, 91.1 billion. So you can see that's really increased nicely there. So yeah, just kind of looking through the financial statements here and looking at the long-term chart. I really like Verizon. I mean, they're one of the best, providers in the U.S. If you want to talk about coverage and, quality, just looking at their cell phone service alone. I mean, AT&T and Verizon, those are the two big hitters there that provide us the best, coverage. And, of course, they're also major ISP for the U.S. I mean, this company's not going anywhere. Like AT&T and Verizon are not going anywhere. I mean, these are the best ISPs and, the best cell phone providers in the U.S. So, I like it. If it moves lower, I'm okay. I'm grabbing that huge dividend, average down, lower the cost basis and get a better dividend yield. So I really like Verizon for a long-term play. And, things are rough right now. We see a lot of stocks that look like this. Not all stocks, but a lot of stocks have suffered the last couple of years. I mean, the economy's been complete trash for several years ever since COVID hit. They're not the only ones that are struggling like this if you look at a stock chart. So, I think there are brighter days ahead for the stock price, and I think it's a really good discount right now. So I'll continue to keep you updated here on ticker VZ or Verizon. Please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.